Student, welcome back to my class. Today we will solve another question of the chapter Accounting for Share Capital. So this is our question and we will solve this question. Before going through the question, I would like to tell you that we will see some new things in this question. First of all, we will see issue of shares at a premium. Now, what is issue of shares at a premium? When shares are issued at a price which is higher than its face value or nominal value, then such an issue is known as issue of shares at a premium. Say for example, if the nominal value of a shares is rupees 10 and the shares is issued to the public at rupees 12, that is, shares are issued at a price which is higher than its face value or nominal value. That is, it is issued at rupees 12 more than rupees 10, 2 rupees more. Then this 2 rupees is the premium amount. The next thing we will see in this question is undersubscription of shares. Now, what is undersubscriptions of shares? When a company receives application for a less numbers of shares then offered to public for subscription, then it is said that the issue has been undersubscribed. Now, say for example, a company invited to the public for 5,000 shares and the public has applied only for 4,000 shares. That is, the public has applied less numbers of shares than the company has actually offered to them for subscription. This is a case of under subscription. We will see these two things in this question. Let's see the question. Tata Limited invited applications for the issue of 5,000 10% preference shares of rupees 100 each at a premium of rupees 20% payable as earned. On application rupees 20, on allotment rupees 70 including premium, balance amount of shares as and when required. By July 1, 2019, the closing date of the subscription, the company received application for 4,000 shares. The shares were allotted by the company on August 1, 2019 and the allotment money was duly received on August 10, 2019 on 4,000 shares past journal entries. So, this is the question. Tata Limited invited application for the issue of 5,000 shares. That is, the company has invited to the public for 5,000 shares. 10% preference shares. The class of the share is 10% and the rate of dividend of is 10% of rupees 100 each. The value of the shares is rupees 100 each at a premium of rupees 20%. Now, at a premium of rupees 20%, let's see, 20 by 100 into 100, that is 20. 20 rupees is the premium. Face value of the shares. Face value of the shares is 100 and the issue value of the shares is 100 plus 20, that is 120. That is, shares are issued at rupees 120 more than its face value. 100 is the face value of the shares, and the shares is issued more than its face value, that is 120. 20 rupees is more. This 20 rupees is the premium amount, that is, shares are issued at premium. Now, payable as under 20 rupee on application rupees 20. On allotment rupees 70 including premium. Now here in 70, what is the amount of premium? The amount of premium is 20. 50 rupees is for allotment and 20 rupees is for premium, that is 70. Now, balance amount of shares as and when required. The company has not called for the balance amount. Here it is written that the company will call the amount in future when the company required for it. By July 2001, by July 1, 2019, the closing date of the subscription. This is the closing date of the subscription. Mark the date, July 1, 2019. The company received application for 4,000 shares. Now see, the company has invited public for 5,000 shares, but the public has applied only for 4,000 shares. See, this is the case of under subscription. The public has subscribed less numbers of shares than actually offered by the company. The shares were allotted by the company on August 1, 2019, and the allotment money was duly received on August 10, 2019 on 4,000 shares past journal entries. So these two cases we have seen in this question. First of all, we have seen that the shares are issued at a premium, and the premium money is included in along with allotment. That is ₹20 our premium amount and 50 rupees is our allotment amount. And the second things we have seen that the public has subscribed only for 4,000 shares and the company has invited for 5,000 shares. These two things we have seen in this question. So we will solve this question. Mark all the important things. First of all, the price of the shares, then the numbers of the shares, then all the date, and then we will solve the sum. So this is the format of our journal. First of all, above the format we will write in the books of. Now, what is the name of our company? Tata Limited. Below this we will write journal. Now, the first column of our format is date column. Second column is particulars. Third column is ledger folio. Fourth is debit. We'll write debit amount and we'll give the symbol of rupees. And the fifth column is the credit column. So this is the format of our journal. Now, first of all, we will write the date and the receiving application money date in our question is 1st July 2019. We will write here July 1, 2019. Now, first entry is for receiving the application money. So when money is received, bank is debited. Bank account debit. Bank account debit. Now, what is the numbers of shares? Numbers of shares is 4,000. That the public has given application for 4,000 shares and the money of application is 20. 4,000 into 20, that is 4,000 multiplied by 20, 80,000. Bank account debit 80,000. Now, this amount 80,000 is received against application money, and the class of shares in our question is preference shares, and the rate of dividend mentioned in the question is 10%. So we will write like this: to 10% preference share application account. To 10% preference share application account. Amount is 80,000. So see, bank account debit to 10% preference shares application account. The amount so received is against application money. Now we'll write the narration. Being application money received on 4,000 10% preference shares at the rate of rupees 20 per share. So this is our first journal entry. Now we will transfer this application money to capital account. So our second journal entry will be the transfer entry of the application money to the application account. So here the date will be changed. The date, now the date is August 1, 2019. So we will transfer the application money to the application account. 10% preference share application account debit. 4,000 multiplied by 20, that is 80,000. To 10% preference share capital account, that is 80,000. Now see, this application money is transferred to the application account. Now we write the narration. Being 10% preference share application money on 4,000 shares at the rate of rupees 20 per share transfer to the 10% preference share capital account as per board's resolution number, no there's no number, as per board's resolution number not dated . So our application money is transferred to the application account. Now we will see the allotment entry. Now the date for allotment is August 1. So August 1, write the date in the date columns. Now 10% preference shares, the company will call for the allotment money. 10% preference share allotment account debit 4,000. Now what is the total amount of allotment? Amount here in the question it is given including premium, the amount for allotment is rupees 70. 40,000 multiplied by 4,000 multiplied by 70, that is 2,80,000. Now we will credit to 10% preference share allotment account. So I have discussed earlier that the allotment money is 50 and the premium amount is rupees 20. So we will multiply 4,000 by 50 for allotment. securities premium, we will write to securities premium account. Numbers of shares 4,000. Amount for premium is 20. 20 is for securities premium. Okay. Now see, this 70 is the total amount of allotment. Now in 70, 50 rupees is for the allotment and 20 rupees is for the premium. Now 4,000 multiplied by 50, that is 2 lakhs, and 4,000 multiplied by 20, that is 80,000. 2,80,000, 2,80,000. Now see the journal entry. 10% preference shares allotment account debit. These two 10% preference shares allotment account to securities premium account. So sorry, here we will write capital. 10% preference shares capital account to securities premium account. Now in 70 rupees, we have seen 50 for the capital amount that will transfer to the share capital account, and that is 20 is our premium, securities premium amount. So this is the journal entry for when shares are issued at premium. Now we will write the narration. Being the amount due on allotment on 4,000 10% preference shares at the rate of rupees 70 per share, including securities premium of rupees 20 per share as per board's resolution number 88. Now this is the due entry for allotment money, that the company made call to the public to give the allotment, and the company has shown the description. See, this is the 50 rupees for share allotment capital account for allotment and 20 rupees for securities premium. Now the next entry is for receiving the allotment money. So now we will give the receiving amount for allotment money. Now in our question it is given that the date of receiving the allotment money is August 10. So we will write in the date columns August 10. Now the company will receive the allotment money, bank account debit. In the question it is said that the whole amount is received by the company, that is 4,000 into 70, 2,80,000. 2. Now this amount is received as against share allotment. 10% preference share allotment account, 2,80,000. See, in this entry the company has received including premium amount, including premium rupees 20, including premium amount for share allotment. So now we'll write the narration. Being allotment money including securities premium including securities premium amount received on 4,000 shares at the rate of rupees 70 per share as per board's resolution. No, we will not write here as per board's resolution. Securities premium of rupees 70 per share. Now premium amount is rupees 20, including premium of rupees 20 received on 4,000 shares at the rate of rupees 70 per share. So now see what is the balance amount. The shares are issued at premium, that is the amount of shares is rupees 20. Company has taken rupees 20 on application, 70 on allotment including premium, that is 90. Remaining 30 rupees on shares. The company has not called for this 30 in our question. In our question, it is said that the balance amount will be called when the company will require the amount. So we will not give journal entry for this rupees 30. So I hope this is clear to all, and in my next video we will see some more new things. That is, we will see calls in advance, calls in arrear, and their interest. Okay.